My name is David Norton, and I'm a director for capital markets here at Circle in Singapore. Our session today is around foreign exchange markets. These markets are the deepest trading markets in the world. There's nearly $8 trillion a day in transactional flow being done over FX rails. That being said, a lot of the times, the rails that underpin foreign exchange are fairly antiquated and prone to fees. And the consumers that eat these fees also tend to be in the most difficult corridors of the world doing activities like remittance. There's some very interesting non-USD stablecoin projects out there, but thus far we haven't really seen any sort of real proliferation. And here to talk about this today are my good friends, Eugene Cheung, who's the VP of Institutions at Bybit, as well as Paul Kremsky, who runs business development at Cumberland. Thanks, guys. Gentlemen, welcome. Thank you for joining us today, guys. How are you?
Good. Thanks for having me.
I'm a little bit nervous because FX is the only market that I didn't actually trade before coming into crypto. It's the only asset class I didn't trade.
Well, then maybe you're going to get a crash course today, Paul. So maybe we'll kick off by asking you a question here. So we know USD markets in the traditional space are the largest and deepest in the world, but there are some good projects out there. As we sit in the middle of 2023 or towards the end of 2023, why do you think there has been no meaningful market cap growth in non-USD backed stablecoins thus far?
Yeah, I mean, I think it's fairly early innings, and this is a space where the dollar was always going to be the leader. When Cash was up here before, he showed some great stats, and you saw that 60% of the market of the M1 money supply is in dollars. And so dollars were always going to be first. And I think the last several years have been about proving that there's like a real business model here, that stablecoins is a business model that works. It's worked really well for Circle. And so you're going to have a few years lag while other companies stand this up. But I think that there's a market structure at play here as well, which is that for the most part, if you're sitting here in Singapore, you're probably trading on one of these international exchanges like Bybit. And if you're trading at an international exchange that really kind of covers multiple jurisdictions, they're all going to gravitate towards these US dollar stablecoins. Whereas if you're trading on a local exchange, you're probably dealing with the local currency. So I think that's part of the reason why we haven't seen much growth yet. But I also think that as the applications for crypto move beyond just crypto trading, then it's going to become a lot more important, right? If I'm trading crypto, I'm probably doing it on something like Bybit. But whatever I'm doing in my everyday life for myself, I'm doing in Singapore dollars, and so I'm going to want some rails that have Singapore dollar enabled.
Understood. Paul, I have one more for you. Just quickly, I know you're on the board of advisory at the Stablecoin Standard. You see a lot of non-US dollar stablecoin projects. When you vet the various projects that you look at for Cumberland, or just personally what you're interested in, what gets you really excited about a project that you see today?
Yeah, so we wrote a paper, and this is a plug. We wrote a paper earlier this year about the case for non-dollar stablecoins. And since we wrote that paper, we've had not just dozens, but 60 to 80 different stablecoin projects from around the world reach out to us and saying, hey, we want to work with you. We like what you wrote here. We want you to be the liquidity provider for our stablecoin. And what we've had to do is we've had to put together a due diligence questionnaire, because we can't get too deep into these projects, because what we don't want to do, we don't want to be the liquidity provider for the next Terra, right? We want to make sure that whoever we're working with is going to maintain its peg, and we have a list of questions that we ask from day one. Who are you banking with? How quickly can you process a redemption if you need to? How much of a redemption can you process? Who are you working with on the banking side? What license do you have, et cetera, et cetera, et cetera. So this is a fairly long list of questions, and it filters out a lot of projects. And at the end of it, you kind of have this group of really strong issuers, as you said, around the world. Out of that 60 to 80 that we've spoken to, there may be 6 to 8 that we say, okay, these are the guys that we want to go in with.
Mm-hmm. Eugene, I'd ask you the same question, but frame it up a little differently. Just from a listing perspective on the exchange, what gets you excited, and what are the criteria that Bybit generally looks at when it's contemplating listing either a token or more specifically a stablecoin?
Thank you. So probably I just want to go back to some history, right? I mean, in the early day, actually, especially a lot of exchanges offer derivatives, right? There's only inverse contract. When the maybe there's no stablecoins hasn't been invented yet. There's only inverse contract, right? And then like so that's how when Bybit first launched our products, it's actually just inverse BTC ETH, and then we start like market getting more linear, right? So I remember when I first joined Bybit about 2 years ago. I think the volume still predominate in. I mean, probably half, but still, like you got more for people trading inverse. But let's say today, the volume, I would say 90% is on the linear. Only 10% is still trading on the inverse. I definitely think like the change. I mean, there's a big contribution because there's a stablecoin like USDC, right, and then also the Tether, right, like they become very popular, and then actually it's much easier for people to trade, you know, especially as a retail customer, you understand much better, like, okay, that's how much trade, and then that's how much my margin, you know, when I'm going to be liquidated. For the inverse, it's a bit more complicated. And then also, there's one more thing is like, what we've been doing is like, it's called unified trading account. So before, like you have to hold BTC to trade BTC inverse, right? And then like, the market development become like, okay, you have to hold USDC to trade USDC contract, USDT to trade USDT contract, with a unified trading account, which means like, basically like, okay, you can trade any kind of contract, with all the collateral you have. So we will have set like USDT, USDC, BTC, ETH with the right haircut. So basically, as long as you have enough like collateral with us, you can trade all the contract inverse, USDC denominated derivative like perpetual option, or you can do that. So I think in that regards, like it's kind of like make it easier to accept or to listing more like non-USD denominated stablecoin. Cause like the back to like Paul's point is like there's gonna be more scenario, like use scenario, not even for the USD but for other currency as well, right, in the future. I think like back to your previous question, but I think the key issue right now, right, for the non-USD stablecoin, the key issue right now is like still the liquidities, right? I think the basically the liquidity is still very focused on the USD, right? Now, I mean, we're happy to listen. We try to do some Euro, we circle with the market maker, but you just cannot generate enough liquidities, make it like, you know, like people easy to trade. I think that's the key problem we're facing today.
I mean, liquidity is a problem we can fix, right? You can come in there with liquidity and show bids and offers, especially if it's a stablecoin that's doing what it's supposed to do. What I think that some of the projects have been struggling with and will solve this year to varying degrees with various projects. Step one is liquidity, making sure that if someone wants to buy the stablecoin, they can do so. For that, you need not just, okay, here's the bid and offer, but you need the bid and offer across wherever people are trading, right? If people are trading on Bybit, you need to have a market there. If they're trading on Uniswap, you need to have a market there. If they're trading on Orca and the Solana ecosystem, you need to have a market there, right? That's access. That's step one. But step two is utility, and that's actually much, much harder, right? Once you buy the stablecoin, what can you do with it? And Eugene just brought up a great example. You can use it as collateral to trade other things, right? Trading stablecoins is probably not an exciting experience for most traders. But using those stablecoins to go out and trade the coins that are supposed to move, that's a piece of utility for that stablecoin. But again, I think what we're starting to see projects enable utility that are actually outside of crypto, whether it's, you know, processing payroll, whether it's doing remittance, whether it's, you know, buying NFTs, whatever it is, moving outside of actual crypto trading. That is a pretty big key piece of utility that I think stablecoins are going to bring to the wider financial market. I really do think that stablecoins are going to be the piece of blockchain technology that actually kind of graduate first from just being a product for crypto trading into the wider fintech market.
Paul, I got a question for you on risk management.
Oh no.
Yeah, it's a good one. The need for stablecoins, I would think, in countries like Argentina and Nigeria, where you have high inflation, that's where you have the real need for stablecoins, more so than maybe euro or more so than Japanese yen. That being said, from a risk perspective, it's a lot harder to trade Argentine peso than it would be to trade euro. So you have the need downstream in corridors where there's peak inflation, but the opportunity to trade is probably more so G7 type currencies. What's your view on that? I mean, the next evolution of growth, do you think we're going to see growth in Argentine peso type assets, or do you think it's going to come from the euro derivative assets of the world?
So as always, you're acting as the devil on my shoulder here. And again, we're kind of a little bit impaired here because I've traded a lot of different asset classes. I've traded equities, I've traded rates, I've traded commodities, I've traded energy. I've never actually traded FX, so right now I'm going to be cosplaying as an FX trader. But the unlock from trading euro, from trading Canadian dollar, from trading Swiss franc, like there's actually a lot that does unlock, but it's not the really exciting stuff, right? And you brought up like Argentine peso. We had Wei from CoinsPH up here, like Philippine peso. Basically all the peso currencies are really exciting when it comes to remittance. Any currency that is controlled is incredibly exciting when it comes to moving money across borders, but they're a lot harder. So our focus here has been really like, okay, let's focus over the next year or two on really developing and illustrating the use case of these G10 currencies. I think dollar is really well established. There's a lot of value to dollar stablecoins. Next, let's move into euro and CAD and Singapore dollar. And then maybe the year after that, we can start focusing on some of these remittance corridors where things get really, really interesting. But there's just more blocking and tackling to do when these are non-NDF currencies. So I think that we kind of have to do the easy thing first and then move on to the more challenging thing. But frankly, that's the exciting part. The rail between Singapore and Philippines, or the US and Mexico, or Indonesia and UAE. Like these are really, really exciting remittance corridors. I just don't think that we're quite ready yet. I think we're probably about a year or two away.
That's fair. Turning the question a little bit differently to Eugene, I know you're a native Hong Konger. We just got back from Hong Kong recently. It's an interesting currency because it's pegged to US dollar. And you look at the growth in US dollar-backed stablecoins, this comes despite the fact that there's largely been a pretty difficult regulatory regime in the United States. Could be a real opportunity for currencies like Hong Kong. And I know that they've signaled some regulation on the stablecoin front. And I'd love your perspective on what you think about a Hong Kong dollar stablecoin or the opportunity in Hong Kong these days.
Yeah, first, I'm really quite excited about the opportunities in Hong Kong. So I actually grew up there, but I left Hong Kong almost like 18 years ago. So recently went back because I think there should be a lot of opportunities, especially in this space. But I think the Hong Kong, the Hong Kong AMM, they launched this consultation paper on the beginning of this year, and then supposedly there will be more detailed guidance going to come out, and then we are expecting maybe something going to come out like last week during the FinTech Week, or maybe during like John Lee's second policy address. But actually, so far nothing really come up. So more likely, we think it's going to be next year. So I mean, in general, I think probably like a lot of you already kind of already read from the different kind of sources. Like the Hong Kong looking at this probably look at differently, right? They are looking at like all the aspects. So they're going to looking at the license for all the entities that will be engaged in these activities. So rather than just like one single license, I think Singapore is looking at like, okay, just going to be a single license for issuer, but Hong Kong is looking at, okay, if you perform the activities for like as a wallet provider or as a issuer or as a payment company, you need to get a separate license. I mean, it could be like there are some existing player, either they can get to some license upgrade. I mean, just like what we're seeing right now with the VSP license, right? They come up with some scheme so you can upgrade your license, then you can provide service to like maybe more like increase your service scope, or you can like increase your client scope, right? So, but I think it's kind of also kind of touched a bit in the earlier panel. I think the opportunity really is like Hong Kong, right? The Hong Kong itself, the position itself, is always served as a bridge. like connecting. Of course, there's like China versus the the rest of international market. Hong Kong itself is an international market. I kind of from my previous experience, right? So before I joined Bybit, I was with TradeWeb. So I was working on this project called Bond Connect. That was like in the 2017. So basically, like in general, they're using Hong Kong first as some kind of gateway to come up with some channel that the China government feel comfortable, right? Kind of like they want to make sure everything's under some kind of control, so that they will allow certain capital can like basically inflow outflow, right, between the China and the international market. I guess that's what people looking at for the future, right? Why people like they want to get licensed. Like I mean, it's not cheap to get a VASP license, right? We are in the process of pursuing one, and then you don't really see like you can make any kind of profit like by just offering a couple peer, right? I think a lot of people just looking at the future. They think there's going to be a lot of opportunities, right? Once like Hong Kong have this own framework, you will kind of like help to kind of bring the bridge between the China and then the rest of the world. I think that's probably people like put their bet on.
Makes sense. Paul, you co-authored a report I think this summer on stablecoins, and you talked about automated market makers, and potentially how FX is the real opportunity for automated market makers. Leave it fairly open-ended, but I'd love for you to get into that. What is that opportunity in your view, and how may AMMs be better suited for trading FX relative to what we currently have them doing in crypto?
Yeah, so I'm going to assume that most people in this room know how AMMs work at a very high level and what impermanent loss is, kind of to hone in. And like impermanent loss is the kryptonite that kind of makes AMMs not as good as a use case as we initially thought, right? You want to be able to be a market maker, but you're going to take a ton of slippage over the course of a year, and you think you own a coin, and then it 100x's and you realize you don't own as much, or you think you own a coin and you hold it against ETH, and then the coin goes to zero, and you only hold the coin. You don't own an ETH. And so impermanent loss is a real problem for AMMs. That's kind of where FX becomes this really cool application of this AMM technology, because we're really used to how volatile crypto is, and that's why everyone is kind of a little bit scared of impermanent loss. But when it comes to FX pairs, like the scope of volatility is just completely different. Impermanent loss doesn't really kick in and doesn't really matter at the scopes that you see on FX volatility. So in that paper, we looked at, okay, over the course of the last 10 years, if you'd been a LP on an AMM in all of the G10 currencies, what is the worst loss that you would have seen? And the single worst loss is, I think in 2013, the Swedish kroner had a 20% move. And that's a big move, but it actually still only comes out to like a 45, 50 basis point loss on the impermanent loss side. So that's not meaningful the way that crypto people are used to thinking about impermanent loss. On average, for Euro versus USD, the impermanent loss that you would have faced every year was 6-7 bips. So it's not a problem, right? And so then if I say like, okay, I live in Singapore, so I'm getting paid in Singapore dollars, but I'm clearly from my accent, I'm American, so I've got a lot of assets in the States. I've got these dollars, I've got these Sing dollars, I can hold it in a bank, or I can be an LP on some platform, throw in USDC, throw in XSGD, and now I'm a liquidity provider in dollar versus Singapore dollars, but I don't need to think about that. I don't need to stress about my impermanent loss. As long as I'm getting yield that covers my risk-free rate, and as long as the exchange itself doesn't blow up, which unfortunately it's crypto, so that can still happen. It's DeFi crypto. As long as I survive that, then the yields I'm going to get are probably better than I'm having it sit in the bank account. So it's valuable, obviously, because I can use it to swap from one currency to another, but it's also valuable on the LP side, and it actually can make almost anyone an LP in a way that you don't really have if the bar is you kind of have to know about all of these tokens, and you have to think about impermanent loss on the volatile side of crypto.
Sure. Thank you. Eugene, I got a question for you just as it relates to private ledgers versus public blockchains. The advantage of a public blockchain theoretically is you have more interoperability between players. just not asking you to pick winners or losers in particular or even mention any names, but what are the properties that you look for in a blockchain in particular that might make it well suited for FX?
Okay, I mean, seems I'm working for centralized exchanges. I'm not sure. I'm the real expert to answer these questions, right? And then, yeah, I mean, but I think just from the previous experience, right? I mean, I don't really know how to pick a name. I mean, we definitely have our own bias. But I think like first it's very important to to have this interoperabilities right now. I guess one thing is like we look back, right? It's like the reason why Bybit actually is a very successful exchanges. We grow very fast in the last 5 years. So this is our 5th year's anniversary, right? But the reason why able to grow is like we're able to offer a global solutions, a global scale solutions on the day one, right? But today it's getting harder because like different countries have a different jurisdiction, right? And then a lot of like market you operate, you cannot really interoperable. So you need to come up with your own like local solutions, which is like didn't scale, right? And then didn't scale means like it's very hard to basically generate competitive advantage or generate revenue. So I think it's very important. It's for the protocol, also for the regulation as wise. It's like you come up with the right standard, right? So it's like something like you can come up like a standard that for the maybe smart contract standard or governance resolution standard. So everybody can build on this standard, right? Let's say talk about in my previous experience in the TradFi world, right? It's like something like Easter. Right, like people like Easter, they will come up with this standard, right? Like fixed in API, so the industry can collaborate, build on something like that, and then that we're able to facilitate the interoperabilities. Yeah, I think if there's some standard can be created, then I think that would be the favorite winner, right? If some people will come up with the right standard, and then everybody using it, and then like that would be the right winner for that.
I have another question for both of you. I think you're both well suited to answer this. I mean, Paul, obviously, we talk a lot about your market making business, but you guys have a strong OTC desk as well. Just broadly speaking, when you think about stablecoins, like how important are banking rails? Like it may seem like a really silly question, but this stablecoin that's currently larger than ours that we would consider a reasonable comp probably doesn't have as good of banking rails as we would have, I would say. So is it incredibly important to have very strong banking rails, or is it more important to have strong OTC and exchange partners, or a little bit of both? How would you answer that?
Well, I'm not going to give an answer that's not going to say how important OTC is, but yes, it's extremely important to have strong banking rails. I think when it comes to stablecoins, you have to start with the worst case scenario and work your way back, right? You have to think like, what's going to happen if everything goes wrong, and you have to work your way back from there. UST is a great example of what happened is like, if everything's not going wrong, it was actually a great market, right? There were a lot of liquidity providers. You could call up most OTC desks, not ours, and get a price at any time for 10 million UST, and it all looked fine. The problem is when something started going wrong, it started going really, really wrong, and then you just get into a death spiral. So yes, the OTC liquidity desks are extremely important. My team would be really mad at me if I didn't come up here and say that. If you want to move real size, that's probably the best way to do it. On and off ramp, stablecoin into fiat is probably one of the main reasons people use a desk like ours. I think about 40 to 45% of the volume on our desk is basically on and off ramp. So that's a role that we play in the market. But at the end of the day, you want to be able to know if I think something is wrong here, how quickly can I redeem it? And if that's a hard answer, then maybe for crypto natives who are comfortable punting around some money and risking some capital, that's okay. But I don't think that the people in this room are really focused on like just stablecoins for people who trade crypto. I think most of the people here are focused on how can stablecoins kind of graduate that and move on to treasuries and move on to people who are doing real cross-border remittance. And for that, like you really need to have good answers to what happens when things go wrong. And for that, it's all about the banking rails. One of the real value cases that we see for something like EuroC is settlement with our European counterparties, because a lot of the OTC desks in crypto actually use us for liquidity themselves. And for us, we want to be able to settle with them quickly. very, very quickly. Like we do a trade with them and then 30 minutes later, they're like, where's my settlement, Lebowski? And so if we're saying, well, it's a wire, but it's coming from the US and you'll get it in 36 hours, that's not a great answer. So to be able to say, yeah, it'll be, we're going to process that in the next 5 blocks, that's really strong. And so that's why these European brokers, they're going to be probably one of the first key use cases for Euro stablecoins.
So I just have a quick answer for that. Banking really important? Yeah, very important, right? Because reason why, there's a lot of country we need that to provide this kind of fiat service to the customers so that they can open an account with us, they can use our service, right? But second thing, it's very difficult for crypto exchanges to set up an account. Right, that's the most difficult things. Like I think, especially in a lot of major jurisdictions, I guess that's one of the reasons. Like for exchanges like Bybit, we are actually very, very actively pursue license in a different jurisdiction. Right, Dubai, Hong Kong, Singapore. Because we need. I think right now it's like you need to have a license in order you can set up a proper banking relationship. Right, that's the one direction we're going. But without having one, we just can do the best way, right? It's like OTC or P2P service, so that can basically provide this service cater our client needs.
You just mentioned P2P. I wasn't going to ask, but Eugene, quickly, do you think the P2P market is growing or is it contracting on your exchange and maybe your peer exchanges?
I think in general still growing. No, I mean I think it's growing, right? But really this kind of momentum is really kind of correlated with the market sentiment, right? I would say definitely growing in the last 2 weeks.
Understood. I guess over the long term, I know we talked about near term, what's probably more realistic from a trading perspective. But over the long term, Paul, what are the currencies that you're most interested in? If you could look out in 5 years and get to trade any specific currency, and enable it via stablecoin, what would you pick?
I mean, the obvious answer is euro. Like that's what's coming first. We talk about US dollar 60%. Well, euro is 20%. But there are so many corners of the FX market where this becomes really interesting. So like Australian dollar and New Zealand dollar, they trade a lot in the FX markets. New Zealand dollar punches way above its weight in FX markets. So that's one that we would love to see there. Some of these remittance corridors as well. Again, like how many domestic helpers are there here in Singapore that send substantial amounts of their money every month back home to the Philippines? That's a huge remittance corridor. And if you can do that on chain, these people are probably paying 5 or 6% for that FX conversion, and there's no reason to do it, right? They could do that for 30 bips on, even a moderate level AMM. So like, let's get that going, and then we can solve that problem. That's a real problem. So I would say a lot of the, the migrant labor remittance corridors, that is one that I'm really, really excited about. But I think, when you and I first met, and again, this shows how boring I am that I'm just always talking about stablecoins. But I talked about like what I want to see 5 years from now. I want to go to the airport, fly into Bali, go there, and at the airport, that FX desk, I want to do the same exact thing I do now, but know that on the back ends, they're using stable coins on chain. That's just like a really exciting world, and I know that's a little bit of a moonshot, but I would love to see that, if we're talking about a 5-year time horizon.
I guess the last question for you both. So let's just, we'll do a little assumption here. Let's just assume over the next 12 months, the stablecoin market as a whole is growing. As it currently stands, US dollar stablecoins are 99% of market cap growth. If we look at in 12 months, what is the percentage of USD stablecoins or non-USD stablecoins? And in 12 months' time, I will buy a beer for the person who's closest on this.
Just one?
Or yeah, we'll get into it later.
So I think a year's a pretty short time horizon for this. This is the kind of stuff that needs a lot of the boring infrastructure work to get done. So 12 months, right now we're at 99% dollar dominance. 12 months from now, like I think if we see something like 95 to 90, that's a home run. That's huge. The fiat space, we see 60%. And so like over the course of the next 5 years, that's kind of what I'm looking for. That's kind of my baseline of where this could go. Although to be conservative, maybe I would say like over the next 5 years, that goes to maybe like 75% of dollar dominance over the next 5 years.
So let's just start with the 5-year benchmark. Eugene, 75% over or under?
Maybe go first.
No, I think 75% 5 years. I don't know, because like I think it takes a lot of like party to involve, to engage, to align before like we will see some maybe other kind of currencies come up. Because I remember like in my previous job, like I think 2010, so there's a number of initiatives about CNY. So, and then I remember there's a headline in the South China Morning paper saying that by the 2015, the CNY will be fully convertible, right? So I think 5 years horizon for currency is still a little bit like, too short. We see something, but of course, I think the regulation will be key driver of this, right? If let's say that some exchanges able to get some kind of a real banking relationship, with certain currencies, like then we will push hard for that, right? We'll push for that currency. That maybe will change things, right? Some like, like the exchange have a very like liquidities, right? And then getting special kind of assets with some currency. I don't know, maybe Middle East, who knows? And then like we're just gonna like push all our marketing effort, education effort to that specific currency. That things can change, right? And then at the same time, maybe US like getting harder on the regulation. So.
I also think it bears mentioning that right now the market for stablecoin is about like 120 billion, something like that. I think 5 years from now, the market cap of stablecoins is much, much larger than that. So even if we get to something like, 80, 90% dollar dominance, there's just a much higher denominator in my mind. Like when I polled our own trading team, what do you think the market cap of stablecoins is 5 years from now? I would say like the median estimate was over $1 trillion. Like stablecoins are clearly a product that has been born in crypto that is going to graduate from crypto and get a lot larger once it kind of grows past the crypto exchanges and that use case. But once it kind of graduates into the treasury functions and the cross-border remittances, then the space just gets a lot larger very, very quickly.
Yeah, I just want to add on that. I completely agree. But I think really like need to do is like the stablecoin. I mean, it's all about the whole DLT technology. You have to kind of further integrate with the whole security transaction, with the DVP like settlement process. Like today, traditional financial world is the DVP, right? The traditionally, but there's definitely a lot of efficiency can be improved by the DLT technology. If things like that happen, I completely agree. The stable coins, in terms of volume can grow like tremendously. Yeah.
Well, gentlemen, I really appreciate your time today. And I think Gaja said it earlier to wrap up her panel, but we really appreciate the partnership that both you guys provide us. We need liquidity in the entire stablecoin ecosystem, and that revolves around our work with liquidity providers and liquidity venues. So thanks again, guys, and I appreciate your time.
Thank you.
Thank you, everyone.
Thank you.